Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Krug, president of 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can listen to all of our great podcasts at americastalking.com. To support Everyday Economics and podcasts such as this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Friday, September 8th, and joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. All right. So Dr. Rose, you spend a lot of time, looking at the housing market and thinking about that. I mean, it's primary to your gig. But just as an economist overall, I mean, you and I have talked for years before you got into this industry that you're in about how important home prices are and the cost of living, because it's just a huge chunk of everybody's personal world. The past month has been a very interesting with regard to what's happening in the real estate market with regard to purchasing a home, specifically purchasing a home. Rates, which felt like at one point in the last year, and even really maybe the last 2 years, that every time you looked, the number changed and it went up. I mean, of course, there were corresponding, Fed hikes that were, driving the interest rate. This wasn't happening on its own. But right now, the rate is stabilized. And I went into Freddie Mac last night, and the national blended average is, I think it's 7.125 or somewhere in that ballpark. You and I have talked about it hanging out somewhere between like 7.25 and 7.35. So call it 7.3%. But there's an interesting phenomenon that's occurring with regard to home pricing. While the rates have kind of like hit the brakes here for the last month and been stable, the cost of housing seems to be going up. And I think there were a lot of people that are maybe sitting on the sideline, waiting for rates to go down under the presumption that, that rates and prices would go down and that they would sort of swoop in and make the best deal that they possibly could. I think they are going to miss the bus here.
Totally. I think what they should be hoping for is for the train to slow down enough for them to get on. That's what they should be hoping for, right? So, yeah, I mean, mortgage rates are hovering around 7.3% according to Mortgage News Daily. And honestly, absent a big economic shock, I don't see mortgage rates coming down anytime soon. We got a lot of pressure, large debt issuance by the Treasury. We have supply constraints in the labor market that are going to keep wage growth somewhat elevated. We got disinflation kind of like stuck around 4%, right? 2 percentage points above the Fed's target, right? Core PCE. And so all of those factors. And by the way, we have a small rebound in manufacturing, and services are the latest. We looked at ISM services. It cooled, but it's still in expansion territory. All of those factors are going to act to push yields, which mortgage rates tend to follow higher, right? Not lower. So you have pressure on mortgage rates to stay elevated, to stay around the 7.3% mark, to stay between 7 and 8%. They're going to fluctuate here a lot. And so I think it's foolish to wait around for mortgage rates to come down. I mean, think about the last time we had mortgage rates down substantially was every time we had a crisis, the bursting of the dot-com bubble, the Great Recession, the start of Lehman Brothers. Nobody wants to go back to that time. And then, people, unemployment surging. And then we had it again when COVID hit. I remember March 2020 and I don't want to go back there. So forget about mortgage rates coming down. Let's focus on what's at hand here. The fact that prices are still rising. The good news is demand is likely to slow this time of the year. Yeah, we're going into a period where, the spring is when people move. Demand is slowing down, partly because of the typical kind of seasonal factors. It's going to slow down. It's probably going to find a bottom. It's going to slow down a lot and find a bottom in December before coming back up again in February of 2024. So perhaps right now might actually be a very good time, right? The last quarter of this year, for those who are still on the sidelines, might actually be a very good time to get back in because the train is slowing and, right, price growth is going to slow. We have a lot of units under construction. we have builders still building, especially they started again in the single family home sector, right? Building single family homes. Construction employment is at an all-time high and still rising. So you got a lot of homes likely to come on the market. And those builders, at a time where demand has slowed a little bit, are probably going to have to increase the number of incentives. Right. We're talking about rate buy downs and closing costs, right? Offering to pay part of the closing costs. All of that stuff is likely going to happen right here, right now, in the third and fourth quarter of this year. And so this time might actually be a good time if you want to jump on the bottom rung of the ladder and start building some home equity. At least, that's what I tell people. I truly believe it. If mortgage rates come down, you always have the opportunity to refinance, right? But remember, the only time mortgage rates fall from the sky is when the U.S. economy is also falling from the sky. And that means a higher risk of unemployment and all the likes. So that's kind of my advice to potential buyers out there. But for your point about the fact that house prices are still rising.
Yeah, is this simply a supply and demand issue?
It is simply a supply and demand. It's totally normal. Demand fell, but supply fell even more. And as a result, demand exceeds supply right now. And so my estimates for the number of prospective home shoppers down roughly 30% since August of 2019. And yet the number, actually says July 2019, last time I pulled those numbers. And yet the number of homes for sale fell 43% during the same period. We're 43% lower than we were in July 2019, right? Basically same time before the pandemic. Right. The number of homes for sale is nearly half of what it was. And so that pullback in supply, that huge disproportionate pullback in supply is why house prices are remaining elevated and why you still have that upward pressure on prices. Lastly, you have the fact that the U.S. economy reopened and you have a lot of people coming from abroad, new families, big determinant of housing demand, new families coming into the U.S., needing housing. And so that's also going to put pressure on rents and prices. So you have all those factors coming together. And of course, that explains why prices, the price pressures are still there. But again, I have to stress for our audience, if you're an investor, if you're just someone trying to get on the housing ladder, guess what? And you really want to do it this year, the last part of the year, the last quarter is usually the best quarter to go. There's less competition. Builders are likely going to raise the ante in terms of incentives. And so it might be a good time, November, December, when the market cools down, might be a good time to to get yourself one of those newly built homes that's coming on the market with all the incentives that go with it. Remember, those incentive rate buy downs mean you're essentially paying a lower rate than the 7% rate. Some builders are giving it 3 points. 2 points, you're down to 5% when you get in, and you have a lower monthly payments for a while.
Hundreds of dollars back to the buyer in those scenarios.
Absolutely. If not thousands of dollars, right? So don't focus only on the sticker price, focus on the monthly cost. And by the way, of course, I'm going to plug Zillow because I love Zillow. It's a great company. Zillow has a search by monthly cost calculator. You can actually go on the website, type in what it is that you want to spend on a monthly basis and actually get all of the inventory that would kind of fit within your budget under a certain number of parameters, of course, and today's prevalent mortgage rates and, how much down payment you got, all that stuff. But anyway, I think it's a great tool. It's a great website. Disclosure, I do work for Zillow. Of course, we love Zillow on this podcast.
What more can you say? Well, let's call it to an end there. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.